Hey there, Wall Street winners. This is a look ahead to the week of April 22nd to 26th. And we are on tap for a lot of economic data coming in, as well as a lot of tech-related earnings, but also the first of some of our oil stock earnings. So we'll start with what's on tap with economic data. And we're looking on Friday for PCE data. And that seems to be what the Fed is focusing on most around making decisions around how inflation is moving, if it's moving down to their 2% target, and how that's going to affect interest rate decisions in terms of rate reductions and the size and timing of those rate reductions. So we're going to see some data come out there. We've got data coming out really all week, but looking at an article this weekend in Yahoo Finance, what I thought was a couple of takeaways that were extremely interesting here. First of all, the economy is strong, is what they're saying, and that is really what's holding the stock market up when rates are not going down. But at the same time, earnings aren't impressing Wall Street to the extent that they often can. And that's being reflected in the way that stocks react the day after earnings. And I found this particularly interesting. So if we look at this chart, what we'll see is in the current quarter, if a stock reports and beats on earnings and revenue, and likely also has a positive future outlook, the stock is rising about 0.8% in the following trading day, whereas normally it would rise 0.9%. However, if the stock misses on earnings or revenue or has a bad future announcement or downscales what it's predicting in the coming quarter or coming year, it drops significantly more. And that drop is down to 5.8% versus I think it says 3.1% there drop. So we're seeing a little more risk on the downside with earnings misses and less upside on the positive revenues. Now that said, we've had a major sell-off in the NASDAQ this week. The NASDAQ was down 5% or more for the week, which is a big drop. The S&P 500, the S&P 5000 is down. The S&P is under 5,000, which it hasn't been, I believe, since February of this year. So there's some calm and correction in the market heading into earnings. And if earnings do what people are hoping that they'll do that own these stocks, which is beat to the upside and suggest good continued future growth, we may see some positive upswings this week in tech and oil and the others that are announcing. So let's go through a couple of those. So first of all, we're going to see the likes. We saw the likes of Netflix last week. This week, if we look down to what's being announced on Monday, not a ton in terms of financials. We have some banks here. We have Albertsons, the grocery chain, and we have Verizon. On Tuesday, we have a slew of economic data here. And then earnings, we start to see Halliburton from an oil perspective. We've got some of the government or military contractors, plane manufacturers, Lockheed Martin, Raytheon Technologies, Spotify and Technology, Tesla and Cars Technology, and Texas Instruments. Now, Texas Instruments will be interesting because they are a big maker of chips for the iPhone. So this will be a bit of an indication on how iPhone sales are doing. They manufacture chips for a lot of different things. So it'll also be an interesting read to see how this compares to what ASML came out with last week, indicating that future orders were in decline. And then Visa. So American Express this week had some great results. I expect the same from Visa. So Visa is going to announce on Tuesday. Then we get into the thick of it on Wednesday. So Wednesday is Meta. Now, if we look back into this article, which I thought was really, really interesting, we'll see where they come up with these numbers. But you'll see here that these big names like Netflix, like Meta and Microsoft and Alphabet are expected to have grown earnings by 64.3% in the first quarter, whereas the other 495 companies are projected to see earnings decline by 6%. So just this handful of companies, tech companies, are expected to have grown revenue in the 60+% this week. And this is when, on Wednesday, we're going to start to see whether that actually materializes. So Meta Platforms, then we have your food provider there, the food retailer Chipotle. We've got Boeing, which I would stay away from, AT&T, which has been a dog, Humana, which we'll see had a terrible drop in the first quarter. We'll see whether it regains any ground. ADP, which also will kind of give you an indication of what Workday is going to do and Ceridian is going to do as payroll providers, but also as software companies that provide payroll software. You've got Hilton for travel and leisure, IBM, another tech company, which has done very well over the last 3 or 4 months. ServiceNow, a software as a service company. And then we get into Thursday, we get a little bit more economic data in terms of first quarter GDP. But as earnings come out, we're going to have Google or Alphabet, Microsoft. We'll have another airline, American Airlines. We've got Intel coming out from a chip perspective, a semiconductor perspective, and then another airline, Southwest, and then another mobile carrier, T-Mobile. And then finally, on Friday, we're going to have some more oil earnings. So we had Halliburton earlier in the week. Then we're going to have ExxonMobil and Chevron and Charter Communications. So I think we're going to see some really good data here out of these earnings. And hopefully what we're going to see is a course correction. And now is a really good buying opportunity to get in and be set up well for the positive earnings out of these tech companies primarily, and see that turn the tide of what the NASDAQ has done this week. Good luck with your trades.